Hello, today is Friday. It is the 18th day of July, 2014. My name is Derek. Welcome. This is a silver chart analysis. I decided not to put the year on the title of this video because I'm going to take a look at 4 daily charts from the 18th day of July. And I also have looked at some information from the COT. Just quickly go over it and let's get started. Previous session talking about polarizing movements, breaking resistance or the range level, and then quickly moving back within the range. Okay, polarizing session today, as it's pretty much the polar opposite of yesterday. Giving back all of the gains. Volatility yesterday was 2.51% as it is today. And we also have highs 2 cents higher than yesterday, lows 2 cents higher than yesterday, as today's lows in at exactly 2074. Okay, now that we've had this session, it's now just wait for this thing to play out as it does, but we know we've had one of these moves now playing as the failure, maybe another one or two or three still going to come. That's possible. But it's very common when you break these ranges or a significant up or down moves that you have that fake move right beforehand. So if we're going down, there's your typical failed breakout. You hit that back in the range really quickly, usually go below it, yes. Form the lower high. Then as you break it, well, then what's the next thing going to be? Is it going to be a big down move? Is this level going to be resistance and 4 weeks down? These are the types of things that are common if, of course, this is the failed breakout. If the move's going higher, well, it's already now had that failed break below. Another way of saying that it just might be possible within the next 1 to 10 days that the market direction will be clear, either up or down. Fairly simple. Let's now take a look at the COT data. What I did is I went on the internet, searched for levels for the start and medium part of the years, January and July. And this is the data that I came up with, January 2004, all the way down to July of this year. And column B is the net longs for commercial shorts, and then the net for the commercials, net longs, net shorts. And I put the calculation in of this, subtract that, which is the total net shorts. And of course, this is the data going all the way down. The chart of this is right here. So you can see the change for these, or I'm assuming are the big banks, has risen. It's at levels not seen in like 4 years. As 58,000, we have 58,000 here in July of 2010. Now this would be more accurate if you get maybe every month or there's more ticks, but for what it's worth, it does show that there's an increase. Now what I also found interesting was there's over 100,000 net shorts, and the last time that I got over 100,000 was January 2006. And if you would have bet against or with them and went short at this time, ouch, that would have hurt. And that's why we're going to move to the 2006 chart now, which shown that the $9 price when the time frame of January of 06 started was in play, seen levels go up to 15. And 15. That's 60% gain in what relative quick period of time. And really, from this level here, you're looking at about 40 days, 35 days, and seeing price action go from like under 10 to almost 15, 50%. Well, 50% in today's value of around 20 is taking it to around 30, well, 31 even. And 50% down is, well, that's actually 33% down. But that would take us to the $14 area. And that's just one way of stating that if volatility, which was huge back in here, yeah, we're at 2%. This is 7.6% on an average of 5.3. Volatility has been huge before in the past. Okay. As far as the analysis of this chart is concerned, notice this little failed breakout. And then, oh man, another lower low, breaking down below this band, looking like this is a failed breakout. Oh man, doesn't that suck? And well, this low of the day was not seen again until the crash day in 2008, or over 2 years later, meaning prices ended up going up from here, as obviously would already be aware of. Therefore, let's now take a look back at another daily chart from this time frame. Let's go back to 1979. Price action was 938. Probably this was an all-time high, as many days coming ahead would play in, and the last all-time high that silver's had, January of 1980. But anyway, this is just a nice, I think this is a typical good chart to show for when is it time to say it's good to buy. And when you have the situation with this nice time correction, you break the high in here, nice big green candle, and nice confirmation of the move, showing that maybe there's more further upside, and obviously, in fact, there happened to be such a case. But I wanted to point out volatility, really not that big, 2%. I mean, that's where we are now. Now, granted, this data I've managed to come up with from the searching of futures contracts, and, well, it's a continuous one, so I don't know exactly how accurate it is. But it's good to have, though. Let's now take a look at a year later in 1980. Okay. 6.88% average. Big moves. Oh, Hunt Brothers. Yeah. When I look back at the move, bringing it lower, that's them playing the game. I will call them the Crimex. They've been playing this game, and they're still playing it today. Well, probably since the 1960s, maybe even earlier, but during this time frame and during our current time frame. And when they play the game, oh, you can only have so much. So it's okay, so you're forcing us to sell. Geez, I wonder why the prices went down so low. I'm going to switch it up to a 5-day chart, which is pretty much a weekly chart, as most days have 5 days in it, which brings it back to that 1978 time frame. This is how linear charts usually look. With the bottom ends, you have these really tiny moves, and then the candles get big up here and medium in here. Well, this is logarithmic, meaning volatility went from so micro to a bit bigger, but micro, boom. And then you have this move, boom, and then the whole move in here is on massive volatility. Again, you're just seeing it go from small to big, and this can happen really at any time. Using Fibonacci analysis within this, the first key level did not find that much support, obviously. It did find resistance, and you're finding support within here. At this stage, when you look at the chart, you'd be expecting a move to this level on any break of this resistance. That would be the significant part. Holy crap, you'd be saying on the big move, and now what's the next key level you're going to take out? Well, obviously it took out this low here. It did manage to go down to 3.5. So now the question is, what's going to be taken out next? Around 50 1/3 or 3.5. And I think that'll be it for today. And I would like to thank you for tuning in. I also did one quick chart. I wasn't going to talk about it, but just for something to do, I'm going to, or because I still have time. And let's bring up the current chart. So volatility, 2%. Now what I've done is I've looked back at the last 3,000 plus days, and I've calculated what its every day's 100 averages. And what I've done was able to come up with a chart something like this. And what it has is what its volatility is. This is closing yesterday's or Thursday's session where it was 1.99%. To me, it's a very clear and interesting pattern, as it's so many green up and so many red down. Yeah, there's a little bit of greens within the red. But as far as the change of when this thing gets active, it could tell you that when it does get volatile again, I think the best way of reading it is just that it's the start of what most likely would be a significant period, because 3 candles up, 8, 9, 5, and this is 37 days. So you're talking about 4 on average, 5 times 40, 200, maybe 175. So that's about a 9-month period of probably volatile movements. That's the best this chart tells me right now. And as far as the down moves, well, we've had like 5, 6 red candles. So any time, but it could be 2, 3 more. It could be another 60, 70, 80 days of low volatility. But it's just due, of course, for higher. Thank you for tuning in, and have yourself a magnificent weekend. Bye-bye.